Doubt about it. Aditya Sood is with us. He's portfolio manager at InCred PMS. Aditya, just wanted to ask you to react to what you heard there from Mr. Jindal. And just generally what it means for the auto space. I mean, it's a day when Maruti's hit a new high, 12,000 rupees. It's done very well in the higher SUV segment. But there are going to be more cars, more models, more players, and a fair bit of aggression as well. Your thoughts on the space?
Yeah, so one very simple view of thinking about this is that, obviously you have got global leaders like BYD or Tesla, who have been clearly, incumbents in the EV space. As they enter India, obviously action will heat up. If you look at the EV market generally, it has been a market which has been dominated by, the price points for EV, and have been, generally, higher. So it really needs to be seen whether, Indians can really, afford or what segment of the market. For obviously, for a mass adoption, I think so China is a way to look forward, and that is where, people like MG or companies like MG or BYD have a huge advantage. So my belief has been that, we would have to look at China in terms of, partnerships on the EV side. US companies entering into India, obviously it is only for the premium segment of the market. And as we know that, lithium prices also have collapsed. So, technology costs in terms of, battery costs coming down is going to be a huge boost to the industry. But there is a key, point which is coming through, and this is as per the recent interactions that we have had with many players across the automobile industry, that ICE is here to stay. At best, I think so in terms of PASCAR as a segment, people are talking about 20 to 25% sort of a penetration by 2030. And Indian penetration possibly is going to be in that range of, 20 to 25%.
Aditya, hi, good afternoon. So that's your overall thought on this category. But then high ticket consumption, I mean, the kind of cars that Prashant was referring to perhaps, that doesn't really make it to your top holdings, right? You do like consumption, but you're looking at more perhaps the mid to lower segment, if I'm not mistaken. I mean, I think you own Barbecue Nation. Just run us through the thought process, because the market has always been bidding up premium end of consumption. That could be sort of luxury housing, maybe luxury cars, but just run us through your thought process.
Obviously, that premium end of consumption, post-COVID has done, very, very well. Going forward, I think so our expectation is that low unit consumption should do well. So there are 2 points here. One is that, if you look at generally the low unit consumption plays, if you look at, for example, fans as a category, or you look at, companies which are generally exposed more towards rural, what you'll find there is that, some of these categories have not even, sort of come to a pre-COVID demand level. So our expectation going forward is that, rural should do well. There is a recovery which is going to come through. And in that segment particularly, what we have seen in last 1 year, two-wheelers have done well as a space. So our expectation going forward is that as we get past the elections, possibly, there is going to be a revival in most of these low unit consumption items. Generally, what we have also witnessed is that, if there is economic prosperity around, and one has to, distinguish that there was an element of high inflation running through, and that inflation hit a lot of us, the consumer wallets very, very hard. So our expectation is that, as that moderates, and a second element is going to be whether that is in the base. So what we expect is that, both should be adequately priced. And if you look at, a lot of these plays that we are, sort of investing into today, a lot of these companies have done the right thing. So what we are focusing here is that, if there is a headwind in the sector, whether these companies are gaining market share in a down cycle. And this is where we are very, very focused. So if you look at a company like Stovecraft, for example, and if you compare it to TTK and Hawkins, they have been consistently gaining market share. So in a segment wherein, there are headwinds, if companies are gaining market share, we believe that when there are tailwinds, these companies should do well.
All right. Hi, Aditya. Good afternoon. Good to see you in. Nigel on this side. So Stovecraft is one stock that you're talking about. Give us a couple of more ideas. There have been plenty of opportunities actually in the broader markets, because the headline index is down only around 3%. but plenty of stocks have corrected 10, 20, 25%, and some of them are pretty good in terms of quality, and they have a narrative as well going ahead. So if you could name a few of them.
Sure. So if you look at our portfolio positioning, obviously, we at the top end of the portfolio has been very, very focused in terms of building weights into, Newland Labs, for example, which obviously saw a massive rally from 1,050 to, 7,000 thereabouts, the stock corrected. We are extremely positive on the prospects of innovator CDMO stroke CMS players. I think so. Newland has an excellent track record in terms of, last 40 years, they have not failed a single US FDA inspection. Obviously, the stock has done well, and there is an impending bill if Trump comes to power in terms of, outsourcing of innovators. So that is a long-term theme that we are backing here. Both Syngene and Newland is something that we prefer. If you look at our IT positioning, it is more focused towards product plays like Intellect Design Arena. And we do believe that, Intellect has a real chance of, having a exponential margin growth going forward. Today, the margins are close to 21%. As the GEM contract gets behind us, possibly, the margins are going to see a 24 to 25% bump up. And there is a very large margin differential between Oracle and Intellect. So our core belief is that, over a 3 to 5 year horizon, Intellect EBITDA margins can trend towards, 30%. And this is in line with our overall thesis that what happened to products, what happened to services in the last decade will possibly happen to product companies. India has not seen a real product company which has gone global. So we believe that, Intellect has a fair bit of chance of doing that. Apart from this, we are very, very focused on manufacturing and Make in India plays, but therein we are drawing a distinction wherein what we are essentially saying and backing is a company like Tejas Network, which is obviously moated to our mind. They have got 350 patents to their name, and it is a EMS play. I think so. It is reasonably priced. If I look at, other EMS companies. So all these companies obviously have corrected 20-30%. One of the things that we should bear in mind is that, bull market corrections are fast and furious, and they always give, investors to position themselves. So our strategy has been to be very, very focused on sizing as these stocks have corrected.
In our last conversation, Aditya, hi, afternoon, you had spoken about QSRs. You already own Barbecue Nation, but, for a value seeker like, you are, we've seen a lot of the QSRs struggle. Valuations have come down, stocks have underperformed. Have you identified any other QSR which looks interesting, or have you bought any other QSR stock other than Barbecue?
Sure. So, we also own, Jubilant FoodWorks, and our core thesis on QSR play has been that the best time to buy a QSR stock is when same-store growth is negative. Now, it is not widely understood and perceived by people that same-store growth can be negative in consumer categories. But if you look at, for example, footwear today, and this has got to do with the low unit thesis, the consumption thesis that I was outlining. Our view is that, as this same-store growth moves from negative to low single digit and then, possibly, double digit, the price movement that you get in a lot of these stocks become very, very interesting. Second view here is that, if I look at the entire QSR space, and if I just compare it to the unlisted comps today and benchmark it to companies who are raising capital in the unlisted space, I believe that, there is significant value here. And just on Barbecue, I think so. Jubilant invested in this company. Jubilant is a 10% owner in Barbecue Nation. When they invested in the company at COVID peak, the stock was languishing at 400 rupees. Stock rallied to 1600 rupees. So our view is that today one of our jobs is to figure out if the worst is priced in. Now, in terms of same-store growth rate, I think so the worst is priced in. So what we are essentially saying is that valuation multiples are much more reasonable. Obviously, this could be a 3-5 year buy and hold story in the sense that one has to be patient and wait for the next cycle.
Okay, interesting chat as always, and we learned something. Aditya, thank you very much for joining us and running us through what you make of the market and, of course, the bets you're comfortable making at this point. Thank you very much, Aditya Sood with the InCred PMS. Markets, by the way, they slipped into the red and now they've got about 10